Hello guys and welcome back to another video from the Bull Bear Analyst. Here we're looking at the crude oil markets, and just before we begin, if anyone is interested in joining my free market analysis group over on Telegram, please feel free to scan the barcode on your screen. Okay, so looking back at the crude oil market, currently trading at around $71.9 per barrel. So this is a significant move towards the downside. We are down 3.2%. So it's not looking that great for the crude oil markets. We did mention that it will go down, it will continue to struggle, and it has been doing exactly that. And I did mention yesterday that if we bounce from this level that we had, that's where we're trading in, then we are going to go back up to the 50-day EMA, but this is not happening. The exact opposite is happening right now. We are aiming for our $60 per barrel or the $62 per barrel. I actually did have a Fibonacci chart here. This is the only support that we have is 62. We don't really have any technical support that will help the market here, apart from the fundamentals, which is the only thing that could help. I did mention yesterday that China is opening up, and there is a glimmer of hope for the crude oil that will go back up. And you would think that demand will help it. Sure, it would help it. Maybe on the long term it would. But right now, what's scaring the market is the recession fears. The market's going to go down if there is doubt in the market, if there's people not spending as much money, especially when they hear there's a recession coming in. People are saving a lot of money, they're keeping cash. So it'll be interesting to see the crude oil right now. I think there is no support unless something fundamental happens that will push the market up, but I think it's going to go down further to around 62 or 60, basing my support here on the Fibonacci chart. But from here, crude oil is not looking that good right now. But the only thing I would take from here as a note, we do have a CPI readings coming out on the 14th, and now looking at the crude oil movement right now. One reason where the crude oil is actually struggling is because of the increase of the rates by the U.S. government as well, which is basically targeting the demand in Europe. Crude oil is being bought by U.S. dollars, so you would expect the demand to decrease if the dollar is increasing strength. And I would just make a prediction. I could be totally wrong here, but I still think that the inflation is actually improving. I think we're going to get a figure, cooler than expected. And I think this explains the dip in the crude oil market right now. I could be totally wrong, but I'm just making let's not call it an educated guess, but just a prediction from or an understanding from what I'm seeing right now.